Hey guys, this is GammaEdge here coming at you with a market recap for May 29, 2025. We'll go through this quick in 5 minutes. So today was all about the transition zones. They did their job. Price was well contained within those, oscillating around the DEX Transition Zone. So if you're serious about trading, SPX 0DT intraday, these are definitely something you want to be looking at. Reason being is we see price interact with these levels day after day after day. So coming into the session today, market trend models where we always start, a little bit of a kind of short-term weakness. Really, it's a pullback in the context of a longer-term, stronger uptrend. Today, we saw a little bit of continuation of that weakness down. Nothing to write home about right now. This kind of pullback is completely natural, just given the run the market has had the last month and a half. Still at close to local highs, so nothing really to be concerned about on a kind of swing trading time frame right now. But if you're looking to establish new longs, we do want to see the cumulative get back above the moving average ribbon, have those trend higher, kind of like signature that we saw right here. And then we obviously want to see filter tick buying. Today we really didn't see much filter tick action, a little bit of selling net, but relative to the buying we saw a couple of days ago, not much. Next, getting our levels right. SPX full complex coming in today. SPX A and SPX P full complex were both strong, call dominated. Looking at the SPX P full complex, remember this is where the traders like to, short-term traders operate. 58.95, let's call it 5900 to 5930. That's your key transition zone, right? That's globally on the full complex level. So we know that 5900 is key level to downside. Flipping over to SPX 0DTE, looking at our key transition zones coming in today, that was 5900, 5905, so 5900 confluence with the full complex. And then drunk consider range was 5940 to the upside, 5875 to the downside. We opened right at the top of drunk consider range, 5940. That was the high set for the day as well. So right now that we have the levels established, how we got those levels, just to analysis of the options market structure and distribution of positioning within the options market structure itself. Understanding where those key levels are at pre-market, right? Then we started trading, started transacting. On my chart, I had the DEX Transition Zone marked here, 5900, 5905. Remember, top of drunk consider range, which is right where we opened. Saw we never got back above there. Then the bottom of the drunk consider range down there at 5875. Right, so today, characterized again by, just on an intraday downtrend, again, you can see we were not able to get above the VWAP. Also, just a ton of oscillation within the context of our within the context, A, of our drunken to the range, but B, our DEX transition zone. So it was inherently just a choppy day, right? And that was further confirmed with A, the market trend model, fairly sideways to lower on the day. Really, nothing to write home about there, nothing too exciting. And then B, looking at our intraday volume analysis of SPX 0DT options, green calls, red put. What we do is 5-minute basis, aggregate volume of call and puts. We find the middle of that, which is called the centroid. Middle of that distribution, we plot that every 5 minutes so that we can understand what the behavior of those centroids are throughout the session. That tells us, one, from the open to any point in time, we can understand the character of price action through the context of the centroid. So is it trending higher, trending lower, trending sideways? Today, sideways, we can just see, today's action was very sideways. By what I mean by there is, the call and put centroids weren't trending higher, they weren't trending lower, they were just fairly sideways. Right, and if you want to unlock, the full palette intraday volume analysis, I know I may be talking past some of you guys that aren't familiar with it. If you go to GammaEdge.us, click on blog. We have an article right here discussing everything about, intraday volume analysis. We also have market trend model. Right, I think we're up to, 11 articles hitting on our tools, hitting on frameworks, all that good stuff. Also in the description of this YouTube video, curated playlist where we have videos supporting all this. But anyways, right, context of the market, choppy action again. So, right, whether you're a directional trader or you're a directionless trader, this is very useful because, so first off, directional trader, okay, we understand we should not be expecting large sustained moves to one side or the other. So kind of tightening up our expectations. And then B, if you're an intraday kind of credit seller, understanding A, where the market is going, but B, where the market is not likely to go based off the context of our key levels in incorporation with our intraday volume analysis as well. So both of those can be very powerful on an intraday basis. And then just recapping for you of how I like to make this, actionable. I'm more of kind of a directional futures trader, right? And so what I saw intraday is we were, lost at the top of the drunken sailor range. By that, I mean we just rejected. B, we were under VWAP. And then looking at market trend model, we were seeing a little bit of, filter tick selling come into the market. We were below the railroad track. So my bias on an intraday basis was lower. But I should caveat that by saying lower if we're below the bottom of the DEX transition zone. And so what I was specifically looking at here is, right, we kind of made one attempt lower, held, rejected our VWAP. So once we got into this area right here, we were consolidating at 5,900. I knew 5,900 was a key level, right? So if we broke that, then there was a good chance that the move was a continuation lower. The target was the bottom of drunken sailor range, 58.75. And so, right, I took a couple of entries in here just because I was getting chopped up a little bit, right? Like I took one here, then we started breaking above the top of the drunken sailor range. So, that's a great way to size your risk because I was risking, 5 points to make 25 points. So that's a 5-to-1 risk to reward. Like, that's excellent. Take that all day, every day. Theoretically, you could be wrong 4 out of 5 times and still make money. And so, right, I think I went 1 for 3 and made plenty of money on this trade. So, right, we got that nice break. Whatever the reason for the break, no idea, but corresponded nicely with our DEX transition zone, and then right to 58.75 scaled out of that position for easy trade on the day. And then right from there, it really wasn't an exciting day. Like, we just kept oscillating around the DEX transition zone. So yeah, not a ton else to say there. Hopefully, takeaways from this video were understanding how we get our key levels, or simple approach to analyzing the market in terms of market trend model, then using the options market to understand where those key speculative levels are at, and then B, understanding price action through the context of volume analysis and applying that in an actual way to trading the markets in terms of understanding character of price action, and then B, understanding where, all things equal, what has happened so far in a session, we can project out where the centroids are going and to understand where price is going. And so I realized what I just said may have been kind of confusing. So showing you an actionable example, this is what I mean. So this is a real-time chart, right? This generates every 5 minutes automatically in the Discord. So this is an example of, we know what has happened from the open to 1:20 Eastern Standard Time in the afternoon. So, right, all things equal, if we understand this behavior, then we can project out where those centroids are going through the rest of the session, right? And we're projecting chop, right? So yes, we can't predict what market's going to do from, a news event, someone coming out and saying something, but right, we can use market generated information, apply that to our framework, and then use that to help us understand, where price may go. Then it's on us, our job as traders, to take that information, find an actual trade from it, or sit on your hands because it's not jiving with your strategy. So, okay, now I'm done for the wrap. A little bit over 5 minutes, but that's all right. You all should have gotten some value out of this. If you did, we would appreciate a comment. Can you even say, the trade you took today, or if you want me to cover something else on these videos, happy to do that as well. I just want to make this useful and actionable for you all on a nightly basis. So with that, you guys have a good night. We'll see you all tomorrow for Friday. All right, bye.